And that means we're now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through these markets one step at a time, top-down analysis style. And it's the last trading day of the week here on August 13, 2021. And we got a fun show planned for you as always. Coach Frank joins us for his regular Friday appearance. How you doing today there, Frank?
Doing well. Excited to be here. I went on a little bit of a sneezing spree about 2 minutes before we went live, so I'm kind of on the fence with the whole sneezing situation, but excited to be here with the squad as usual, talking some trading, talking some charts. I always love it.
And did you bring some of your favorite charts for a little bit later in the show?
I got a few that I'd like to look at for sure.
Yeah, Matt, how are you doing today, sir?
Does it start with Microsoft's breakout, Frank?
That's a good start.
That's a good start. I'm doing absolutely fantastic, Tim. I'm excited to be here with the crew to break down the activity here today. I'll tell you what I'm not doing as good as. That beard Frank's got rocking over there. That is fantastic. I've said for a long time that man has Viking blood, and his beard does prove it.
There is. My grandfather came here directly from Scotland, so I'm not too far removed from somewhere over there.
Yeah. So there you go, my friend.
So you're saying I should start get a head start on No Shave November? Is that what you're saying? Is that what I'm hearing?
I think I need to get the head start on No Shave November, my friend. If I'm going to compete in any, no, I take it back.
Bro,
I'm not competing against you. It's over. It's game one. You win.
He's not just a leader in the clubhouse. He literally has like a 20-shot lead, and there's only 4 holes to go. You cannot catch up with his beard.
I'm excited about it this time. I didn't have a camera last time, right? So I'm excited to participate this time around.
Yeah. Well, it is August. No Shave November. Yep, I'm gonna get started. My wife's gonna hate me.
I like it. It's too dang hot to be growing a beard. It's 100 degrees like everywhere in the country right now. All right, let's get down to market analysis. By the way, if you're out there and you're coming into the channel here, welcome back. Hashtag Team Tackle gets the conversation started for us each and every day. Looking forward to any questions, comments, thoughts you guys have as we go through the content here today and talk markets. And if you are brand new to the channel, make sure you subscribe. We do this stuff every day. The markets are live. Let's rock here, Matt. It's been a healthy week for the markets, just kind of meandering up the charts, holding on to the trends. It's finishing on a high note, but a light range candle, and it's been that way all week. What's your read on the market here today?
Not a vastly different read than what we've been kind of analyzing throughout the week. The market has been a fairly boring market this week, quietly, as the market has been building up momentum, especially the last couple of days. But it's been a little bit of a quiet market this week. Every single day we've tested a little bit of the lows here, and you see it's just kind of riding that lightning, riding that 9 EMA as it starts to build momentum in the chart. And the analysis on that breakout, we legitimately called it a breakout last week. You're seeing the continuation and the follow through, and but I think the most amazing thing is, even though the breakout was officially last week and we're now 5 bars into this breakout, I actually kind of like the market a little bit more next week than I did coming into this week. When you actually look at some of what the sectors are doing right now, you get a fairly clear read in the sectors from a technical perspective. We'll take a look at those here in just a second, but 5 bars into the breakout's still strong and starting to build on the momentum on the breakout. I think it's a very positive thing going into the weekend.
Sure. You guys were talking pre-show, and everybody's kind of eagerly anticipating the tech breakout. The NASDAQ's looking good. You even highlighted Microsoft first. Frank, what are you seeing across these markets just in general to start?
Yeah, it looks like just you had some great movement in steel, in chemicals, in finance. Looks like there might need to be a little bit of profit-taking development in those areas, but you are seeing some interesting breakout developments in tech. I found a lot of different interesting semiconductor charts that I really liked. The grocery stores just continue to march to a beat of their own drum. They're momentum stocks nowadays. Tim was flabbergasted
wow.
as we were talking.
Yeah, they're a pandemic stay-at-home stock. It's just ridiculous what the grocery chains are doing.
See, I wonder if I should do my trader complain. I chose Kroger. No. I should have went Albertsons, but it's like that's a first world problem, right?
Albertsons has been a juggernaut. Look at ACI. Look at the ACI
Kroger.
chart.
So you chose Kroger. Oh, garbage. Just absolutely garbage. And then Frank's looking at, but it could have been that. Yeah, well,
but
good luck being the only trader ever to be like, I think Albertsons is going to go GameStop on us. Like, just
It was,
random, but
yeah,
amazing. Don't get me wrong, amazing. It's a great company, but just random.
We also don't listen to traders complain about making 10% just because they could have made 40%. Like it's like,
exactly. I understand.
it's
I
like
understand what
Kroger's
type of a
done just
complaint
fine.
it sounds like.
Yeah. Yeah.
Yeah.
I mean, they have been juggernauts, though, and it does bring up sector question, Matt. I want to get to at some point here as we're kind of talking markets, but let's flash through these indexes if we can. The S&P is obviously very healthy and strong. Dow broke out earlier this week. It's looking very, very good. NASDAQ's looking like it's ready to break out, and the rut is still stuck in the middle of its range. Anything grabbing your attention from an index perspective?
Not from an index perspective. You're looking at when you take a look at the S&P, obviously broke out last week, just kind of riding that line as we indicated just a moment ago. You take a look at the Dow Jones, you're seeing something a little bit similar here, a little bit better momentum, maybe a little overextended in the short term. You've had a little bit of momentum pop in the industrial sector, excuse me, in the Dow Jones with the strength of the financial movement. And so you're seeing the benefit of the financial stocks here in the Dow versus the S&P. It's a bigger percentage in the Dow versus the S&P. And when you look at the financial sector, you're seeing a sector that has probably done in the short term with its with this short-term momentum. Look for it to form a little bit of a high base, maybe a flag, maybe a retracement. But this movement right here, the upward movement in price that went up quite dramatically, probably a little bit overextended just in the immediate short term. You look at the Dow, a little bit more overextended versus the S&P. Maybe the S&P plays a little bit of catch up next week versus the Dow, but overall both of them very healthy. And when you look at their weekly charts, you're looking at a breakout out of that 35,000 level just last week, continuing this week. That looks very, very attractive in the short term, in the intermediate, and in the long term with that type of quality breakout. And so just a little bit overextended in the Dow on the short term, but those weekly charts in the Dow look really good. The weekly chart here on the S&P is just a consistent juggernaut. That's all it is. It's just a consistent juggernaut. And then when you look at the NASDAQ, a little bit of a different read as the S&P broke out last week, as the Dow broke out last week. Dow kind of led that charge this week. NASDAQ's taken a little bit of breather. And again, I just always come back to what Coach Tyler says all the time: the anatomy of a bull market. One market runs, the other one takes a breather. Well, the NASDAQ took a little bit of a breather over the last 3 weeks. You're seeing the consolidation to where near the top of the chart. You're looking at a little bit of a high base on those longer term charts. You break that down into a daily time frame. You see a little bit of a cup and handle type continuation pattern, looking for that to break out. And then when you come down to the actual sector itself, you're looking at a sector that looks at a very, very clean trigger above 155. You see confirmation above 155, and then you go down to the individual components and you're looking at a breakout on Apple at 150. You're looking at the breakout of 290 on Microsoft. And so you're looking at the NASDAQ, which has been a little bit taking a breather, taking a little bit of a nap over the last couple weeks as the financial sector has produced, as some of the material sector has produced, as healthcare continually produces just nonstop, utilities going gangbusters. As some of those other areas of the market have heated up, the NASDAQ took a little bit of a siesta. Looks like it's waking up a little bit in time for next week's scouting reports, I'll tell you that, which means post earnings, technically looking solid. Looks like a pretty attractive trading environment in the NASDAQ the next couple weeks.
Yeah, there's opportunities in many, many different areas of the market. The NASDAQ's definitely one of them. You highlighted anything else in the sectors you wanted to talk about there, guys, Frank?
No, Russell 2000. Oh, sector conversation. Yeah, we'll have more to say. I mean, but in terms of the Russell 2000, the last index, no, just still stuck in mud.
Let's talk sectors next, then, if we can. You mentioned utilities being very strong. It is. It had a really, really good run throughout the week. Financials kind of bumping their head up there. We talked earlier in the week about the rotation back into those cyclical names, but now there's eager anticipation around that tech chart breaking out here. I'm looking forward to the rankings that we're going to be doing with the coaches here in just a few minutes after our show, Matt. We do that each and every Friday to get the team out there prepared for the week ahead. What is your read in these sectors right now? Because there's some interesting charts.
Well, I mean, I haven't done personally, I don't know if Frank, you've done your rankings yet. Personally, I haven't done my rankings yet. I'll do them immediately following the report here. But when you're looking at the sectors, you really, and again, we at Tackle Train break these down into three categorizations. You have the growth areas, which is the technology, communication, discretionary. Then you have your cyclical sectors, which are very economically sensitive: industrials, finance, basic materials, and energy. And then you have your four categorizations of traditional defensive sectors being staples, utilities, real estate, and healthcare. And when you're looking at those defensive areas of the market, specifically healthcare has been one of the better performing sectors over the course of the last few months. A little bit of stabilization here, neutrality when you're looking at a 132 to 134 type of neutral condition. I'm looking at this sector as it's been hot. Look how hot this sector has been. It would not surprise me in any capacity, especially now that we're looking at a little bit of double top, a little bit of a double bottom. These pivot points could be debatable, but what cannot be debated is the slowing momentum in this chart on the backs of this type of momentum here and on the backs of that momentum there. And so you're seeing a little bit of slowing momentum, and this sector has performed a little bit better than its recent earnings reports have. And so in terms of the raw performance, would it be shocking to see a little bit of stabilization, consolidation at the top of the chart? Not calling for it. You're still seeing a very hot sector, but you are seeing some slowing momentum in this chart. Where you're not seeing slowing momentum is consumer staples. Did an amazing reversal with the strengths of those grocery store chains like Kroger's and Albertsons this week. Really kind of led that sector. Last week, we're looking at a sector rounding top, rounding bottom. Didn't have a lot of momentum in either direction last week. This week on the backs of the grocery chains just broke out. And what you got to like about this sector following the weakness from last week is it just broke out and went gangbusters against some major resistance zones. And so you're most likely going to be seeing maybe a slight downgrade in healthcare. I'm not saying it's going to happen. I'd like to get the other coaches' take on it first. But you will be seeing an upgrade in consumer staples given the strength of those grocery chains and the strength of the multiple time frame type breakout you're seeing in consumer staples. Utilities looking to get upgraded as well, given the fact that you're breaking out. The short-term momentum hasn't really changed, in my opinion, from a technical perspective in utilities. What has changed and what is strengthening the argument for utilities in the short term is the importance of the resistance levels that it is breaking out of this week. When you're looking at the resistance over here, about 67.5, coincides with that resistance, you're violating that, and there's really nothing on this chart until you get into the 70 by 71. Look for this recent momentum in utilities to continue as it does violate that very important 67.5 to 68 handle. Real estate looks like one of those downgrades to me as it looks to stabilize at the top of the chart. Take what I said on healthcare. Again, slowing momentum is not bearish momentum. It's just bulls are looking somewhere else right now. And you're seeing a little bit of that as well. You're seeing a violation of the 9 EMA here this week with the volatility we saw on Tuesday. You're now looking at a little bit of mixed analysis from a support and resistance perspective. When you start to see pivots change, you got to be looking at breakouts. That could take some time here in the real estate area of the market, and it's been hot over the last few months, and so it wouldn't be shocking in the defensive area of the market regarding real estate to see a little bit of a step back. Now, when you're looking at the cyclical areas of the market, finance has been that juggernaut in recent market history. You're seeing a breakout of that right shoulder 37, just drives up in price. This is overextended at this point, and you're starting to behave like you want to see a little bit of a bullish retracement here in this area of the market. This type of candle here does not signify high base to me. It signifies profit taking is what it tells me. And you're profit taking on the backs of a very strong 10% movement to the top side in less than 2 weeks. Look for a little profit taking in this sector following such a radical movement to the top side. Look for that to come down, test 38, maybe 37.5. That would be your traditional bullish retracement. And while this sector is slowing down a little bit, other sectors are starting to cook in this area of the market. Once again, the cyclical areas of the market. You take a look at industrials on the backs of a little bit of the conversation on infrastructure this week. The $1 trillion infrastructure plan looks like it will be passed. The $3.5 trillion plan, not so much here, but that was always going to be a debate, though. It was always going to be a debate. The $1 trillion plan wasn't a debate. That was almost a given. We're not even talking about a tremendous amount of new money in that $1 trillion infrastructure plan. About half of it is actually old money from other bills that Congress has signed into law. And so when you're talking about that cold water being thrown on the $3.5 trillion plan, especially the last 24 hours with 9 Democrats saying they will not hold the vote for the $3.5 trillion plan unless the $1 trillion plan is passed. And so that $3.5 trillion plan was always going to be a debate. It's going to be a debate, but that's always been in the cards. It's the story of this week is the $1 trillion infrastructure plan. On Tuesday, you saw the market break out, seen a little bit of strength coming into this area of the market. And so while finance is taking a little bit of profit taking in the short term, maybe you see money continually come into industrials here. And energy is starting to solidify towards the bottom end of the charts here. Last week, you're looking at this as a little bit of chop. The week before, you're looking at this as a bearish retracement. The more time has passed, it's starting to change the picture a little bit in the energy space. And you're starting to see reversal analysis galore in when you're looking at the industries in energy, when you're looking at the individual components in energy, you're starting to see reversal candidates here as well. And so over the next week and a half, as energy starts to solidify itself, start solidifying those watch lists as well, because this is starting to show reversal tendencies, not confirmation. We're still in the reversal scenarios here technically, but I'm starting to get a little excited there. And then in the last area of the market that impacts cyclicals, you got the basic material space. And very similar to industrials, pops on Tuesday with the infrastructure news, gets overextended in the short term. But I'll tell you right now, guys, when I'm looking at this space, I'm seeing a very simple analysis. You're looking at gold stabilizing towards the low end of the charts. Not a lot of trades in gold right now. More time-based analysis, allowing those charts to solidify themselves, very similar to energy. But while gold kind of takes a break, still is in a profit-taking session. Look at some of the steel companies over the course of the last couple weeks, going like gangbusters. You could see this momentum start to slow down a little bit, very similar to what we talked about with the financial sector. But what is starting to cook a little bit is those specialty chemical companies this week. Here's one of them, Lind here. It's showing a high base consolidation, looking for a potential breakout there. You see another, and again, these are just a couple examples of what I'm seeing in this space. You take a look at ALB here, real strength coming into that high base type analysis post earnings. You take a look at IFF. These are all specialty chemical companies. Pop, run, high base. Look at the continuation there. So you're seeing a little bit of chemicals start to set up following important pops, but also a couple darlings of ours at Tackle Trading. FCX here, Freeport McMoran. Copper starting to solidify itself as well. You're looking at an increasing in support, looking at a fairly consistent and decent breakout channel right there around north of 39 at 39.20. You take a look at SCCO here as well. Reversal, W formation, double bottom, double top violation. Look at all those moving averages starting to turn over here on SCCO. don't have the 200-day moving average, but that's right into that zone as well. And, Coach Frank and myself were debating which one we liked the most, the consistency of FCX or the quality and the reversal and the technicals of SCCO. Regardless of where you land on that debate, you got to like both of them. And so whereas it still might show a little slowing momentum, gold stabilization, copper and specialty chemicals is starting to cook. And then the last categorizations of sectors you have is the aggressive growth-based sectors. We talked a little bit about that technology potential breakout. I'm going to take a quick peek at it technically. I love the combination of the analysis from the top-down approach in technology here. Again, you look at a NASDAQ, right? You take a look at NQ here. NQ hovering again a little bit of a cup and handle, looking for a breakout, pretty tight against the breakout channel as well. You take a look at XLK, nice little short-term cup and handle, tight against the breakout channel right there at 155. Then when you break it down to the individual components, Microsoft breaking out at 290, Apple not breaking out yet, but testing the breakout channel at 150. I do think a sector to be in a spotlight, maybe not an upgrade this week, given the fact that we have not broken out yet, but you got to know traders, they love preparing for those potential breakouts. Technology looks like it wants to be that test next week. Comms, very quickly, comms, you got to like comms, but you don't love comms. It's just kind of in one of those weird technical environments here. Discretionary, very similar conversation. Been a very amazingly consumer confidence reports, inflationary reports, and here's the discretionary sector. We don't care about any of it. We're just going to be boring this week. So I kind of feel it's going to be boring next week as well.
What's interesting about discretionary, there was a consumer sentiment report today that literally was one of the worst ones we've seen in a long time. It's not moving the sector at all. I mean, it didn't have a market impact, Matt. Concerning headline, by the way, you and I were talking about it quite a bit through the morning. Lowest level, I think, since 2011, biggest drop since, the COVID crisis. In 2008 was the only one bigger than that. So the consumers are not happy right now, though.
They're not happy, but there's also a fairly substantial reason why they're not happy, despite the fact that the economy is improving constantly, month after month after month. The economy is improving, wages are improving, but they're staring down the barrel of two nasty headlines coming at them that have been very recent. Even though people that tackle trading, right, the people that come to the halftime report, we've been talking about this inflationary conversation for a year. Right? That's how long the market's been talking about it. But how long has Ma and Pa America been talking about the inflationary conversation?
Probably just a few months, maybe.
Not even that. Not even that. They're waking up when it hits their pocketbook. And when it's hitting their pocketbook, it's over the last month and a half, 2 months. And so you're staring down the barrel at some nasty COVID Delta variant type headlines that constantly are in our face, in our minds, in our ears, every aspect of every day. And then you're talking about an inflationary conversation that, for the most part, people do not understand how inflation works. But what they also start realizing is that as inflation starts to creep into 7%, 8% year over year, they start to feel it because 70% of Americans are paycheck to paycheck. Regardless of how they live from a debt perspective, they are paycheck to paycheck. And so when you start to have 7% inflation year over year on a wage growth that is at 2.4%, that is a 5% variance that they have to start thinking about certain bills that they're not paying. And it doesn't even matter at that point if they have the job and the economy is improving and the Fed is talking about transitory language or not, because they're not familiar or aware of any of that, because they're going to their job, they're coming home, they're raising their family, they're living their life. They don't eat, sleep, and breathe financial news the same way that people that come to tackle trading are. And so they realize it for the first time, not because of the headlines that we've been reading over the last year, but because they're now seeing it in their personal spending on a month-to-month basis, and that gets very, very concerning very quickly. I'm not sure it's a market relevant story because a lot of these individuals are not market participants, but it is a massively important human interest story for the health and well-being of America in general.
Yeah, and there are some concerning data points that we're all grappling with for sure. I appreciate the thorough breakdown on all those sectors. By the way, a lot of good stuff there, Frankie. We're going to have some fun times.
So I was going to bring you in, guys. I was I was on the train.
Dude, you
were moving and shaking. You were moving and shaking.
So
I didn't want to interrupt. You did a really good job. There's a couple of quick notes that I would like to add, Maddie. Healthcare. One of the big things that's going on right now is the healthcare plans, the UNH, the Humana, the Anthem. They're not playing ball. They are big parts of that, right? So while technically they're not great, watch for them to stabilize as maybe a little bit of a signal that healthcare as a whole is trying to stabilize. Is something I'm watching for. I like the areas that you're looking at, Maddie. Chemicals, copper look really appealing. A lot of interesting things in tech and in the semiconductors. I think you did a really nice job, and I don't really feel like I have to fight against anything that you said, really.
Very good. All right, then let's flash through commodities. And Frankie, I'm going to have you do the, the heavy lifting here. We'll get you in. Crude oil kind of stuck. Gold first, you bet.
Let me take the sectors, Frankie, and you take the garbage of the commodity.
Thanks, Tim. Thanks, Tim.
Give me all the bull picks. You take the garbage, bro.
He's got beautiful charts to share with us later. I'm going to make him analyze the tough charts right now, but you're doing nothing. Crude oil kind of.
I'm going to go look at that tech breakout again.
You probably could.
I want to do that too.
All right, so let's play a game then. Let's play a little game.
All right,
is there anything interesting here I need to know about?
No, I think for crude, you're still in the same area. I'm going to watch to see if this pivot, we developed this lower pivot, turned into a reverse cup and handle, but that's still a ways away. I'm with, the same school of thought that we're really in a range. You can try to trade within that range if you're an intraday player, but if you're a swing player, you're either cash flow or nothing.
Okay, gold, same question.
Gold, no. I mean, it's a good bounce back, right? Like Matt said, maybe we can see some stabilization, but that's the best that we're hoping for right now. Let's see what happens when some of the profit takers come in off of the last few days of upward movement, see how it develops. This is going to take some time. No trades in here beyond intraday.
Yeah, and can I just add some context here on gold very quickly? All you've done, you puked up an algorithm response and basically gave it right back. That's the only thing that has actually transpired here. There has not been anything fundamentally here. This has been a 100% algorithm puke up on the breakdown, and then basically it's stabilized towards the lows, and people realize that gold's average price should be around 1,800. And that's the only thing that has occurred here. There's no trade here. Not even chasing the momentum in the short term. You got to wait for gold to solidify itself. And the simple reality is, while this chart is garbage, there are some beautiful Michelangelo type charts in the marketplace right now. Let gold be garbage and let it solidify itself. There's too many good things out there right now.
That's well said. Yeah. And then here's one though, Bitcoin, Frankie.
Yeah, that one's
a lot interesting in this one.
That one's very interesting. Yeah, you could definitely sign me up for a little breakout of the top of this last week of range. This makes sense. We talked about it last week when we were kind of debating, is it 50,000 or is that old pivot? Well, the pivot was in the way, right? That's where we've been. That's where we've been showing, a little bit of profit taking. Makes perfect sense. If we can break through that, listen, 50 seems like inevitable, but there's more room than that, right? From a purely technical point of view. I absolutely think that this is a playable breakout if we can take out those tops.
Yeah, it's looking very healthy. Been developing that way in a while. Why 50 though? Just a round number nature of it?
Well, yeah, I mean,
52
just the big, just kind of the big number, and it, I think it made maybe a little bit more sense, last week, right, when we weren't sure. We love the technicals. We knew that we should respect that old pivot, that old support is new resistance, but we also knew that it was really just one real data point, right? And so, yeah, it's just a psychological thing. I mean, it's just another good step for Bitcoin, right? I mean, again, whenever you're talking about things that are coming off of bottoms, there's nothing wrong with trying to go further. There's nothing wrong with being a wimp and just trying to catch little windows, but there's nothing wrong with trying to, run it back up to 60K, right? I mean, who am I to say it's not going there? I'm not going to listen. I'm never going to get in Bitcoin's way. That's one thing I'm never going to do.
Tim, say 60K. Just say 60K.
60K.
Yeah, I could see that.
Okay.
I could see it, yeah.
Say 80K.
Can we say ETF? Can the SEC finally give me an ETF? 80K.
Not the one that would not No, you mixed analysis. No,
I understand. I threw you off.
no on the ETF. Yeah, I could see that.
Yeah.
No,
80K.
it's you got a lot of momentum coming in here, and it doesn't need me or anybody else to say you do not fight the momentum in Bitcoin.
No,
Nope.
no.
It gets real fast.
Definitely picked up. And by the way, the ETF reference, Valkyrie is the latest firm to try to issue application for an ETF to the SEC. SEC, let's get on board here. Get something out there in the marketplace. Come on, consumers want it. The market wants it. Come on.
I had something bad to say about the SEC, but I'm not going to say it now.
You're holding your tongue. All right. All right.
I want to throw something to
that
you
joke,
real quick,
that
Maddie.
joke might not have. That joke might have hit too close to home.
Yeah, that hurts. It's Friday. That's not happening. We don't have to put him through that. What do you think about coin, Maddie, after the response on earnings kind of stabilizing doji here today?
I think coin's in the zone of where you are looking to pick it up following a reversal. It's a choppy nightmare a little bit.
It's a little chopper. Yeah, it's not going to be a smooth.
The number one Bitcoin proxy out there that just had its very anticipated earnings report following a breakout. It's choppy. It's very choppy. But you got to like the zone it's in. And so when you're looking at the potential reversal pivot point, you could say, you can make a technical argument. It's all the way up to this pivot point at 260. You can make an argument that the chop starts at 250. So wherever you're looking at that zone, you're looking at the zone at 250 to 260 being that potential reversal type support zone. You're testing that on the gap down following earnings. Then you look at the stabilization following Bitcoin stabilization today. The general philosophy is Bitcoin is going to continue to appreciate, correct? That's the general philosophy, which does anybody think that Coinbase won't generally appreciate then too?
You would expect that they'll participate to one extent or another.
Yeah, maybe not direct, right? But it's going to go in line. It's like a river going downhill. It's going to go in the same direction. So I think you got to like the zone Coinbase is in. Is it the question that I have though, Frankie, is not do you like it or do I like it? Like, is the volatility enough that we are comfortable enough putting it on, say, the scouting report?
Right. And I don't think so myself.
I don't think so. Like I would like to see the volatility stabilize a little bit. So I do like the zone it is in, but gun to head, yeah, hit the buy button, hit it fast. But it's just choppy. That's right. It's just choppy.
It was a good candle. Today was really good development, though, I would say, based off of where we had our gap, our really no buy day, right? Stabilize at a very respectable, that's what it should have done, right place. So definitely, I think worth keeping on the radar. If you've been interested in it at all, I think you continue to maintain that interest.
I agree. All right, guys. I appreciate the rundown there through the market skyline. Now, let's move into stock talk and cover a couple of the key earnings that happened here today, Matt. Giant Disney out of the communications sector, Dow component as well. They posted numbers last night after the bell. So did Airbnb. Let's start with Disney, obviously. What did we learn from this report, Matt?
We learned Disney is still a profit-making machine. Disney, first and foremost, Disney should always be analyzed kind of like gold, longer term, not shorter term. But I do like the potential reversal characteristics on Disney from a short-term perspective. On their actual numbers, Disney reported a very good earnings report, in my opinion. They came in at 80 cents versus the expectation of 57 cents. Revenue came in at 17 billion versus the 16.8 billion. That resulted in around a 45% increase in revenue year over year. And whereas in the last year, we've been reporting on Disney's earnings, just amazing subscriber growth, Disney Plus, all streaming at Disney doing very well. Well, that's similar today. I mean, Disney Plus came in at 116 million subscriber versus the expectation of 112 million across all streaming. They came in at a whopping 174 million subscribers. They were profitable in almost every segment. Disney Plus year over year. Now we know last year what it was to Disney Plus, but it's still very impressive in streaming, up 102% in just the total subscriber growth in the past year. That is a amazing number for streaming out of Disney. But the storyline, and I think the headline news is Disney returns to profitability here on the backs of the Disney theme parks and recreation segment doing very, very well, whereas they took a loss of over $4.5 billion last year. This quarter, they came in at a profitable $995 million, and that was, whereas the streaming was anticipated, the Disneyland recreational theme parks was not to a certain extent, and so that will be the positive moving forward. That was on the gap up. Seeing a little bit of profit taking following the gap up, not to be too concerning. Let's see how Disney navigates this 180 to 182 handle. That's where the potential reversal will solidify itself. Positive news, positive response. Let's wait to see Disney test support.
Definitely got to be on people's radar. Should be on everybody's radar long term, quite frankly. And those sub numbers are really impressive when you give context as well. When they started Disney Plus, they projected 60 to 90 million by 2024. Here we are today, and they're crushing those numbers, man. It's been wildly successful.
If you know the Disney Plus storyline, these numbers on Disney Plus are very impressive. But I know Disney's, we don't talk about Disney every day. We don't talk about it every week. My goodness, we don't talk about Disney every month. But remember, the great corporate war of 2050, Disney's a participant in that one.
That's right.
Just remember that.
That's right. Frankie, anything on the chart that grabbed your attention here?
Not really. I mean, I agree with Maddie. It's more of a position. Once in a while, Disney will get momentum, and then I think you can think about it from a more of a trading perspective. Right now, we're not there, right?
We're not there.
If I'm looking, from a longer perspective, I mean, I'd love to see it pull back a little bit, fill this gap, and look for something there. But trading wise, which is kind of what I'm primarily focused on when I look at Disney, not really. I mean, talk about it. Hey, let's hang out up there for the next 2 weeks, and maybe we'll talk about a breakout, right? But as it is right now, nothing to see in my mind.
Yeah.
I don't disagree. The zone it's in, you could see reversals here. But Frank's right. It takes time.
Absolutely.
This one takes time. Airbnb, let's move on to Airbnb here. Airbnb has an interesting reversal longer term characteristics here, as well as you see the 130 handle, 130, starting to get tied up against that resistance channel right around, it's choppy, but I'm going to give it 155. So that is technically, now let's take a look at their actual numbers. They were expected to come in at a negative 47 cents. They actually came in at a negative 11 cents. So even though it's a loss, it's a much better loss than anticipated, and tough to read over here, but you see the loss here, $11.24, $1.95. That's a growth story start to build here as that reversal characteristic starts to take hold. Just keep an eye on that over the course of the next quarter. It is certainly interesting. Revenue came in above the expectation as well, 1.3 billion versus the 1.2. That resulted in about a 299% increase in revenue year over year. They did add some commentary. They expect Q3 to be one of their better quarters. However, they did warn of the Delta variant, COVID variant impacting bookings. They said that could impact it, but still going to see a little bit of a record number. So a little bit of cold water from a Delta COVID, but that's to be understood when we're talking about a company like Airbnb. Still like the positive beat on EPS. Really like the EPS storyline building over time here. I really like that. As you start to see the EPS storyline, negative $11, negative $1.95, negative 11 cents. You see that building to profitability. Let's go Airbnb here. But what you're also seeing, you take that out of the equation, as the fundamentals kind of solidify themselves post-pandemic, you're starting to see a little bit of slowing momentum following that big drop earlier this year. You're starting to see stabilization, W formation at the bottom of the chart. Keep an eye on Airbnb. Like the EPS storyline coming back into the fold here for Airbnb, like it as it fights up against that W reversal pattern as well. Frankie, do you have anything technically on Airbnb?
I like that potential breakout a lot. I like the double bottom that we're trying to put in here. Again, you kind of nail it. It's about 155, right? As
It's
far as where
choppy.
that resistance is, but it's got a pretty clear path into the 165, 170 range if we can break through that on the back of earnings. So I think this is very much worth keeping an eye on. I think you need to see it break. I think it would be pretty nice to see it stall a little bit
Yeah.
of profit taking. We're talking like 2 or 3 weeks from now, we're breaking out of that. I think that could be a really good
little high
trade.
base here, Frankie.
Yeah, I think that could be a really good trade if we get a little bit of development. But broadly speaking, I mean, anything above there, I look at it and I say, hey, we've got a good window beyond this, 155-ish. We've got a good window for $10 to $15 that we can probably try to navigate some trades in. So I definitely would like to keep these guys on my watch list.
Yep, I agree. And then rapid fire style, and then I'll turn the rest of the time over to Frank's charts. Let's go with Doordash here very quickly here. Dash reports negative 30 cents versus negative 20 expectation. They came in above expectation on revenue at 1.2 versus the 1.1. Technically gap down. You can't miss on EPS, guys. Not this quarter. Can't miss on EPS. Miss, gap down, trying to recover. You could see a trade here, but I just think there's much better candidates out there following some volatility on their earnings report. Rocket Mortgage here. The reason I brought these ones up, interesting. This chart, it just screamed Mark to me. It just screamed Mark to me. It just, I had to bring it up. I was looking at earnings today, and I'm like, looking at Rocket, and I'm like, okay, earnings were not good. They weren't good. Came in at 46 cents versus the 49 expectation. Revenue came in at 2.7 versus the 2.9 expectation. Miss and a miss. Earnings weren't good. And so why did it scream to Mark? Because earnings weren't good and it's firing off the lows, and that made me interested. So it just screamed to me, Rocket Mortgage, Mark off the lows. And so is Mark here? Is he here?
He is not.
He's not here. I would like to get his take on Rocket if he is looking at it as well.
I'll give you his take. If it comes back down towards 16, I'll sell the $8 naked put.
You're not wrong.
I hate that so much because it was so accurate. It triggered me because I'm like, okay, you just never want to be wrong, do you? I get it. You triggered me. That was so accurate. And then finally, wheat and precious metals here comes out 36 cents versus 37. Reason I'm bringing wheat up, there's no trade here, but it's wheat and precious metals, one of the bigger players in the gold market. Hopefully we might, and again, I keep saying stabilization in the gold market, right? Stabilization. Well, you're seeing Wheaton here fire off the lows on the backs of a very lukewarm earnings. I've seen much better earnings from a raw numbers perspective in other gold areas of the market. Wheat and precious metals, 36 cents versus 37. That's just not good enough right now. 330 billion versus 323 expectation. Revenue went up 33%. Once again, decent numbers. If this is 2019, not good following pandemic when we know what's happening in the other areas of the market. What is interesting though is stocks firing off on a very lukewarm report. Rocket firing off on a very lukewarm report. We haven't seen this a lot, but these are companies towards the lows. It does pique my interest in those charts stabilizing. Maybe there's a little bit of thirst there for or appetite, I should say, for these companies right now coming off the lows, like Rocket, like Wheat and Precious Metals, like some of the other gold stocks.
I appreciate the roundup there. And by the way, I love that Airbnb, a longer term development on that pattern, like you guys were talking about. It's going to need some time there, but really good looking weekly chart as it's kind of working through. Speaking of good looking charts, though, we're going to move into our last segment of the week, as we always do here. And that's where Coach Frank, who is a technical master, there's no question about that. He runs our Twitter account at Tackle Trading on Twitter. He goes through the markets every week, and just like we all do, and kind of prepare for the next week, finds his favorite charts, and he's going to share some of them with us here on our show. Frank, what you got here today?
Ooh, this is a tough one. See, I wanted Mark here because I wanted to talk Starbucks with Mark. They've pulled back to their 20 weekly. And so while this is more of a Mark, naked put type of a play and needs some development from a trading point of view, they've been very responsive. As Mark would say, that 20 weekly is strong and one of the most underrated things out there. Got to like the placement. So I'll just bring that one up to him in the Sky Report meeting. However, I think it's worth keeping an eye on. from a trading point of view, we still need a little bit, right, Maddie? But it's not quite there. But you got to like the little bit of retracement that we're seeing on that longer term time frame.
Yeah, absolutely. I do think you got to be interested in the deeper pullback. You're right. It's not a tradable situation for me, but it is a position investor pickup zone. And
Yeah.
so you got to be interested from a trading perspective. You take a look at the weekly chart. One technical data point does interest me, and that is if you recover the high of this week, which coincides with the pivot point over there.
Yep.
You could see some quick journey back up to the highs. So that this key point here on Starbucks, it'll get vetoed this week.
Right. Yeah, it's for later.
It needs a week to kind of work out that detail. But that data point right there at about 119.20 does interest me.
Yeah, one or two more weekly candlesticks in that ballpark, we could get a really good trade set up. All right, but I'm always looking for Mark too. I know he doesn't like the same thing as I do, but whenever I find a Mark, that's a Mark chart, I always try to snag it for him.
See, and I thought I found the rock. I thought I found it. I thought I found the Mark chart.
Well, there's two different Marks, right? So it just depends.
Just two? Just two?
Well, just two.
Okay.
All right, maybe a few more than a few more.
Let's get some of your killers out there, Frankie.
All right, let's start with TRMB Trimble.
Uh-oh.
Yeah, that's never good.
Oh, you want to know what the emergency alert was?
Yeah, what was? We do want to know.
Is that piquing your interest?
Of course it is. Everyone's interested.
Hold on.
Everybody needs to know this now.
So you heard the emergency from my phone, right? Okay, you got the emergency, and now you're like, what's the emergency? Okay.
We all want to know.
Is it an Amber Alert or something? Like
you would think it was an Amber Alert.
Like that's
the Amber Alert, right? Because I was like, oh wow, do we need to go find something? No, severe heat today. Thanks, guys.
Thanks for the info. Yep.
Thanks for the emergency update.
Yeah. Maddie wasn't going out in the sun anyway.
I already shut my window. I'm good. Lord Almighty.
Oh, goodness.
It's amazing how that automatically piques your interest. Like,
of course it does. Everybody was wondering.
It's hot outside.
Everybody gets the spidey senses. I'm like, no, it's just hot, guys.
I think we should go look at natural gas chart right now if we can.
There you go.
There's a correlation.
Hold on.
Oh, that's the NASDAQ.
I'm not giving you edgy.
All right. Back on Frank's charts then. Let's go. What you got next?
All right, let's go with TRMB Trimble.
Yeah, I was looking at them today.
I really like this nice little orderly flag that we're seeing back into the 9 EMA. We're at all-time highs effectively, right? So we don't have a bunch of stuff looming on top of us. Great trend. Recent broke out of a long-term trading range. Need a little bit of movement to come out of that flag, but just an easy, good old, continuation type of a play, right?
Yeah, it's fairly pure on the flag. What I like about is the easy stop loss placement. Trigger's a little bit complicated, right? I mean, that's going to be a little bit of eye of the beholder technically intraday. But stop loss placement under 88 makes a heck of a lot of sense.
Yeah, you should get some good risk to reward. And I do think when you're playing, 9 bounces, you want to be, I'm pretty loose with my stop losses most of the time. But on these, kind of big, these momentum pull back to the 9, let's see if it bounces. I really like just them being, low risk, high reward type of plays. And that is what, obviously depending on where you like to get in, but you should have a pretty favorable risk to reward ratio.
Yeah, I agree with that. Especially with this recent momentum in the short term.
Right. Yeah. Right. I know you already brought him up, but you got to look at Microsoft one more time. I mean, you really got to like that breakout.
Bring it up 100 more times.
It's going to keep getting brought up. Right. I mean, it's, and it's hopefully it can kind of, lead or coincide with tech as a whole, NASDAQ breaking out. But I mean, again, strength at the top, right? Very clean breakout, very easy, repeatable pattern. I don't need to tell anybody at Tactical
I don't
Trading
think decisions need to be made here. I think a lot of people are in.
I think so.
Just keep on coming.
Just more the merrier.
Hey, the bandwagon's big. Just keep on coming.
There is room for more. There is 100% room for
You
more.
gotta love the Microsoft breakout of 290. You gotta love the Apple breakout of 150 as well. Thank you.
Yeah, absolutely. Now this one's for you, Tim, and that's somebody you bring up all the time, and that's Sealed Air, SEE.
Ooh. See?
It just seems to me that every week Tim brings this up, and I'm probably not remembering it right.
I think I brought it up quite a few times.
You brought it up
as
a
potential
lot,
candidate.
right? You know,
I mean, look at the trend there in
sure.
the long term.
Yeah, I mean,
right?
it's hard to argue, right? There's been a lot of good times. You know, we broke out. We basically spent the last 3 days consolidating, right? And that's what I like about this. It's kind of playing right along with the market, right? It's not outdoing it, but certainly not underdoing it on as far as where things are at. Again, one of those breaking out of a longer term range, always have some upside in these type of scenarios. Wouldn't mind maybe 2 or 3 more bars to develop, and kind of get a really good intraday range developed with the top up here around 60, 60, 75, 61. Maybe test that bottom just once or twice more on the intraday. But I do think that we still have some room on this breakout.
Yeah, probably. I mean, going down to an intraday chart here, trigger right there above 60.75. You could map out, a nice little stop loss below it. The hard thing I'm having is just it's had such a big run into this location. I know on the weekly chart it took quite some time to get there. Matt, are we overextended into this, or that you still see a potential run and momentum?
No, again, it's how you categorize this 3-day movement. I could certainly see more consolidation, but where you guys are talking about the trigger would be the continuation bar by bar momentum trigger, and that certainly can be played. You could also see a scenario on Silt where you see another couple days of consolidation where you allow these short-term momentum averages to catch up, form a little bit more of a traditional high base. And whether or not you're seeing the momentum trigger above 60, 75 today, or whether you allow it, 2 more 3 days of consolidation, I still think that 60-75 trigger is tradable.
Yeah. Good looking
if it breaks on Monday, I would call it momentum. If it broke next Thursday, I'd call it a high base. But
yeah,
it's tradable.
And I would prefer Thursday if I have my choice.
Me too. Absolutely.
If you're going to let me choose, I will take that. Just quick. Oh, go ahead, man. I didn't mean to cut you off.
Well, Thursday, and the difference is subtle, but it's important. Thursday allows that 9 EMA to catch up, form a little high base where you're looking at that next move as a true leg, a true movement, a true breakout, whereas you're just seeing this as simple consolidation within the greater movement, with the backdrop of this price movement here. And so, yeah, it's a wonderful question, Tim. Wonderful question. I do think at this point it's overextended. Bar by bar would be the technique. You give it a few days of consolidation, you're looking at that as a potential high base with the breakout.
Good. All right, what you got next there, Frank?
This one could be fast and easy. I think we talked about them last week, and that was just APH. They were on a little 74 breakout. They've, basically were somewhere between a flag and a high base. I think right now you could call it a high base, pushing into the tops. Again, another one of those tech type of stocks that are, shaping up for some interesting breaks. And so whether it's anything that I like or that Matt or Tim like, I do think there are a lot of interesting potential breakouts out in the tech space as you're going into next week. A lot of candidates.
It's a little different, obviously, than the last one because more development into that high base here, Matt. We've been 8-9 bars after it had that really, really good run post earnings. Yeah, what are you seeing here?
That's a wonderful debate. Which picture do you like more?
I like this one more.
Do you like this one more, or do you like the one we just talked about? Because the one we just talked about needs these 5 days to get to where it was. And personally, I will always side with a consolidation against this momentum versus a continuing of the current momentum. I just feel like technically it allows short-term swing trading. It's a much better environment for short-term swing trading, in my opinion.
That should crank it back
and
up,
I could understand that side. I don't know that I have a preference. I also, I do like the 3-bar high base breakouts. I do have a personal liking to those, but broadly speaking, I would agree with you. Give it a couple weeks, let people have a chance to take profits and get excited about the breakout. Let more people find it, right?
Yeah.
So they can break, so they can help out on the eventual breakout if we do get that. Maddie, I know
Hey, what does Tyler say about him? The longer the base, the higher in space.
That's right.
Right?
Yeah. I'm going to say the longer the base, the better the taste. That's how I'm going to roll. But maybe it's because I'm hungry. I don't know.
You just got to compete with Tyler. You got a healthy little rivalry with Tyler.
I do. He is my arch rival for some reason.
Why does Tyler have like 3 arch rivals?
Everybody rivals with Tyler.
It's just fun
because he's fun. Because he doesn't take it. Yeah, he just has
because
fun.
Because he doesn't take it serious. Yeah, that's
right.
why.
That's what he wants you to think. I know you're listening, Tyler.
All right, Frankie.
And just a couple points. There's a lot of interesting things in the chemical space, as you pointed out. So whether you're looking at reversals like WestRock, WRK, that's kind of battling the 50, I really like those type of patterns. Things at the top, for breakouts over on Lynn. Hey, I really like those type of patterns too. Definitely some interesting names out in the chemical space. One I brought up to Matt, and this will be my last one, Tim. I know you're going to do it. Let me find them. Make sure I have the right symbol for you. They were a cheaper stock, and they were, not going to be the most exciting name, I would say, but I think they do have a pretty interesting risk to reward. And I'm just trying to grab them because they were a new stock that I have never worked with before, and that is.
Oh, you found a potential gem.
Yeah, okay. AMTX. So I'm sure I have probably ran into them, but not enough to recognize them as having ran into them before. But they've got this big old bottoming pattern develop. Obviously, they need to break back above the 50, and they're in a space that I do like for potential breakouts. I thought they were interesting as far as a low price stock, fairly cheap risk in the sense of, I'm not saying they're going back to 2750, but I'm not saying they're not, right? So I do think they present an interesting way to look into the chemical space. If you if you want the higher risk to reward, there's probably safer, and better names and charts.
Yeah,
and weird. Like that.
These guys have a little mixture of everything.
Yeah, they're an interesting character. I like the reversal characters. We basically have that triple bottom, right?
They got some energy and oil and gas stuff in them too.
I like this pattern. I love when you have the double bottom clear breakout form. You have the 1 day that just basically tricks us all on the bear breakdown, and then we fire back up, right? I always like that, and then I'll call that a hold of support. I would love to see these guys maybe pinch a week between the 9 and that 50 and then break through that. It's a little bit of a different, it's a reversal type of a chart, right? And all the good and bad that come with those reversals. You've got a lot of layers ahead of you, but you got a lot of upside ahead of you too, right? So it depends on where you sit on that, on that discussion.
Yeah, I'd put them. It was AMTX, right?
Yeah, AMTX.
Yeah, they're like a Phillips 66.
So they're a little more energy and a little less chemical.
They're a little more energy than chemical.
Interesting. So they're energy with a chemical kicker. So if we get XLE to break out along with the chemicals, these guys might even sound a little more appealing.
Could be.
What you're saying.
They're more appealing to me that I know they're more energy than chemical than when they were chemical, because chemical's been strong, right? You'd have to, in the back of your mind, you got to ask yourself on AMTX, it's not AMTX, AMTX, AM. When you're looking at AMTX, I'm like, oh, why aren't they performing like other chemical companies, right? It's more of a small cap oil and gas company, pipelines, refinery business, a very diversified company. But technically, I'm more interested now with the reversal happening.
Yeah, and I love the kicker with chemicals. I love the oil, the energy with the kicker of chemicals from just a whether it's this trade or not, just from a watch list perspective. When those scenarios arise, right, where and it might be in the relatively near future where energy, which has been trying to stabilize, ends up breaking a little bit of resistance. It's going to hard to be be gung ho about it on that break, but you're going to be respecting it, right?
Well, you're looking at a little bit of reversal following its recent earnings here. You see the slowing momentum. Look at this price movement here versus that price movement there. You're seeing the slowing momentum. You got a little bit of a reversal characteristics with a right shoulder that's slightly higher than the head. You're seeing a breakout. You're seeing reversal characteristics here. Now, like I said on energy might take a little bit of time to reverse in terms of next week, but give you a little bit of stabilization above $10 here, in between 10 and the 50-day moving average at 11. Who doesn't like an $11 trigger in a few days from here?
Oh yeah, and yeah, I mean, I just did a very quick, what would, where would probably be my stop and target. But I mean, these guys going into $14 on that break seem very reasonable,
to me.
And so, I know it's hard to do for sure, but it seems
you got
like
some stuff at 13 maybe.
Yeah, but there's nothing there that, there's just too much chop. There's no important chop to me and if there is, then I would completely nullify him, right? And so that's of course going to be in the eye of the beholder, but really it's the 20 weekly. They've got a nice little pocket to work with, so we should be able to make risk to reward work. Different character for sure, but I'm glad I found them. I think they are going to be a good addition to a watch list, whether it's for this trade or things down the road.
Yep, agreed. Well, thank you, Frankie.
Yeah, as always,
my pleasure.
That was a lot of fun. There's a lot of great charts in there. Appreciate the analysis, guys. Guys, that's going to bring us to the end of our show and the end of our week here at Tackle Trading on the halftime report. It's been a fun week in the markets. We're kind of just continuing into these upward trends. Markets are very, very healthy. Final thoughts to end the week here, guys. Frank, you first.
Just keep doing what you're doing. It's been a fun market to trade. Right. It's been a fun market to trade. We go with the strength, and stay away from the weakness. Just continue to follow your rules, and I think the market as a whole has been pretty rewarding to those of us who have.
I like it. Matt, final thoughts for the team.
Yeah, it's been a great week hanging out with the team this week in the halftime report. Hopefully you guys enjoyed everything that Tackle Trading brought this week and helping you navigate the markets on a daily basis. This weekend, obviously, the routines are scouting reports and newsletter, getting ready for the week next week. And if you need anything from Team Tackle, email team@tackletrading.com.
No question. You guys are the best out there. We appreciate you guys so much. We're going to go get ready for the weekend reports and kind of collaborate as a team.
Favorite 2.5 hours, 3 hours, 4 hours. I don't even know how long you and I go. Everybody else kind of 2 hours.
It's like last man standing. We can't. Yeah.
Well, last man standing is always me and Frank.
I know. You guys are always like the king of the hill right there at the end. We're going to have some fun with that.
We're the guy with the hand on the car. We're waiting everybody out.
There you go. Have a wonderful weekend, Team Tackle. If you're not yet a pro member, there's a link to our 15-day trial of our pro membership services in every one of our YouTube videos. I also dropped a link in the chat. See you guys on Monday. Have a good weekend.